This is the GME 1-year overview reading for the year of 2024. It's currently February 7th, 2024, 2:45 p.m. Eastern Time. GME at the time of this reading is currently $14.15 USD. And the shuffle video that we're about to play for you for the GME reading was created on September 24th, 2023 at 10:13 p.m. Eastern Time. That's this video here in the corner. So the overall theme of behavior for GME in 2024 is there's a notable amount of price change in 2024. It looks like we go from at least 1 point on a 1-year chart, we go from the bottom of the range all the way to the top of the range, and it looks like that move starts out of a decline. There's a prominent peak on a multi-year scale, and it looks like there's a strong possibility of like a highest high for a 10-year period, or just a really prominent high on the 10-year chart scale. And then the behavior around the high side, there's a cross-reading congruency there. There's a significant cash out opportunity at the high. So that usually indicates a very important high of some kind where you want to close out of a long position. Behavior around the lowest low, we have a rally out of the lowest low that increases with momentum moving forward in time. Now, it's important to understand, guys, that each cluster of 4 cards going left or right across the screen here represents 1 month out of the year, and the 2 cards in the middle going left to right represent about 2 weeks of time. What's important to understand is that not each card's energy necessarily lines up perfectly with 2 weeks of time, so there may be some readings in which case, at some point in the reading, you'll need to give it plus or minus 2 weeks of wiggle room. In cases where that does happen, which it doesn't happen all the time, but it does happen occasionally, in cases where that does happen, you want to make sure to pay attention to the sequence of chart events as predicted, because that will remain accurate and keep you on track in cases where we veer off a little bit on timing. It happens occasionally, guys, so be very careful of that. So actually what we're going to do, guys, is I'm going to get into the week-by-week chart behavior, going month by month. I'm going to talk about information having to do with the high and the low for each month, as well as the timing of the highest high and the lowest low for the year. All of that in just a moment. Before we do that, I want to make sure that everybody's aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing, as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise, or you can use YouTube Tips, and that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. Let's get back into it. All right, guys. So in January, there's an important support level that's highlighted, and that's important on like a multi-year chart scale. Important support highlighted, and it looks like in early January, we rally into a January high, into key resistance on a 1-year chart scale, and we decline from that resistance with consecutively lower spikes up on the way down. There's an important range highlighted on a 1-year chart scale minimum there near the January low, and it looks like we probably have a pretty sharp decline to reach the January low, which I think is probably on the cusp of January, February. In the later part of January, there's a rally out of a trough that offers opportunity to open up a short position, and I'll talk about that in much more detail in the paid version, but there looks to be like a prominent peak and 2 prominent troughs within January of 2024. Now, when we get into February, there's that prominent trough on a 1-year chart scale there on the cusp of January, February. In the early part of January, we rally out of that trough, break through a key resistance, stay above it briefly, and then break back down through that same price level shortly thereafter with the full retracement, most likely taking us back into another trough of the same price level. The low for February actually indicates a sideways S formation. So usually when you see that, it indicates that there will be 2 lows. So we decline from a resistance to a support. We reverse, go all the way back to the resistance that we fell from, and then reverse and return all the way back to the support that we made it to the first time. So it's like a sideways S within a channel, usually 2 declines with an incline in between, providing 2 troughs. So that looks like the 2 troughs take place in early February. There's an important peak on a 1-year chart scale there at mid-February. And a cash out opportunity, or a trade opportunity, I should say, at that peak, which I'll talk about in more detail in the paid version. The February high, there's multiple failed attempts to break through key resistance, and then later part of February, we have a period of sideways rotation that ends with a fast sudden move higher. It also looks like it's mostly like we decline from mid-February into this important support in the later part of February and rotate sideways into March. There's a fast sudden move higher followed by a sharp drop within this whole period of sideways rotation on the cusp of February, March. An important technical price level at the March low, when you see the science card, it indicates an important price level on a scale greater than the time frame of the reading that it appears in. So this would be an important price level on a scale of a multi-year chart. And a very, very important bottom there. It looks like we revisit, usually with the queen of this, what we do is we revisit a support level that was recently a past opportunity. So chances are we're going to revisit the trough that we saw on the cusp of January, February. That could be the second visit, that move higher followed by the full retracement that we talk about in early February. That low in early March could be the second of them. It's possible. And that would be the case if we don't see in just the early part of February a move higher and a full retracement with two lows. If we don't see the second low in early February, then it's probably going to take place there in the early part of March. Big move to the upside to reach for distant resistance into the March high, and I'm advised to be cautious in the later part of March. Some sort of tricky chart behavior. Usually you see multiple false tops or bottoms or some sort of behavior like making it look like you're going to go in a direction and instead you go the opposite way. And it would make sense to have a prominent trough here, and it would look, I'm also being advised at this trough not to chase the decline into this trough. So my sense is that it's advising me to be cautious because it probably looks like we're going to go lower at this point in March. There's probably be some sort of like technical behavior that would indicate we go lower, but instead, even in the face of seemingly overwhelming odds, we move to the upside in early April. There's another prominent peak, very likely the same price level as the one from February. Not definite, but very likely. From that peak, we decline to and through support to meet a second support, and then we rotate sideways along that support before breaking down through multiple supports into it looks like into a period of volatility near the low, where there's a sharp drop that stands out in that period of volatility. And there's another fake out in the later part of April. I'm advised to be cautious. There's an important price level that's highlighted in the later part of April at a peak. That's probably where we see like this need to be cautious. It probably we break through that price level, making it look like we're going higher, but instead we turn around and we decline. We have this trough on the cusp of. Oh, okay, so this is where we have that big move from the bottom of a range to the top of a range, guys. That starts out of a decline. Interesting. So there's a trough mid-April, May, probably a slightly lower one in the early, like the second week of May. That may be the same price level as the lows from the first quarter, but in either case, off of the May low, there's a big move pushing the higher, pushing the upper end of a range higher on a one-year chart scale. That's the Aeon card indicating probably one of the biggest moves, if not the biggest move to the upside of the year. And it starts out of a prominent trough. So in the early part of May, there's this U-shaped dip, and then this big move off of the low back to like a peak in the later part of May where we do sideways rotation. The high of May is an improbable opportunity that will really stand out amongst other opportunities on a one-year chart scale. When we look back at 2024, it'll really stand out. Oh man, I wish I got in there, or oh man, I can't believe I got in at that point, or it's one of those type of opportunities. In the early part of June, we have a failed attempt to break through key resistance, followed by a decline through key support, and that resistance will be, technicals will lead us to believe that we're going to break through that resistance and go higher. So it's a very big disappointment when we turn around instead and decline through key support, and it's usually falsely established, like recently established support that was falsely established just prior to that failed attempt. So we'll probably break through the support here that we have at the peak in the later part of May. Sharp drop and bearish price swings into the June low, and that's probably towards the later part of June. Prominent low on a one-year chart scale. Very, very likely the same. Oh, and a prominent peak at the June high, even though we have that failed attempt, it's a prominent peak. Okay, so and so then we have this prominent trough, very likely the same price levels as the first quarter again in the later part of June or mid-June. Well, hard to say, but the low of June, somewhere in June, the low of June is another prominent trough that'll stand out on a one-year chart, probably the same price level as the first quarter lows. But there's a sideways fluctuating rally in later June that precedes a notable decline. I just want to point out to everybody how you can get a one-year reading. We're running roughly a 98% average accuracy. You go to our website, tarotfortraders.com, hover over our services, click on SO Meta Posts. Guys, so what you get with the paid version, basically you get the timing of the best trades that we see, and also the type of chart behavior to look for as far as entry and exit into those trades. We look at any cross-reading congruencies that may be apparent there or present there in the reading as well, because those will help to give us an idea of where we are in the greater chart kind of scale. We talk about trades from a multi-year standpoint as well, and it's super valuable information, guys. Our 2023 readings, for the most part, we ran roughly a 98% average accuracy, predicting highs and lows to the week. So with that said, these are super underpriced. You won't find this information anywhere else. You go to our services, SO Meta Pulse, scroll down to one-year report, click here to order, specify the year you're interested in, and then put the crypto or ticker symbol. If it's crypto, please specify crypto. Add to cart. Really great way to support the channel. Much appreciation to everybody that does that. Again, you won't find this information anywhere else, my friends. With that said, let's get back into it. We have price swings in the early part of July, a prominent peak on a one-year chart scale, and a sharp drop in the earlier part, maybe like the second week of July, a sharp drop to the downside to a prominent trough standing out on a one-year chart scale. In those price swings as well, though, there's a prominent peak that'll stand out on a one-year chart scale, and it may be like a new local high of some kind. We move higher through resistance to form it. We stay above that resistance briefly and break back down through that price level shortly thereafter, making like just like a triangular poke through that price level to create the July high. And the July low forms when we have a rally along a diagonal trend line that ends with a fast sudden move higher and then a breakdown through that diagonal trend line with increasing volatility on the way down. The later part of July, we have a fast sudden move higher standing out on a one-year chart scale. Possibly another big move pushing the upper end of a range higher, or excuse me, another big move from the bottom of a range to the top of a range there. It's very possible. Not as strong a possibility as there in early May, but it's also possible there. And then on the cusp of July, August, there's a notable decline from a prominent peak on a one-year chart scale through multiple support levels in the early part of August. The August high highlights an important resistance on a one-year chart scale that we failed to break through many times before. It's a prominent peak on a one-year chart scale. It looks like that prominent peak is towards the later part of August. We have a failed attempt to break through key resistance, followed by a decline through key support into the low. And the later part of August, there's a notable decline to revisit a important support level on a one-year chart scale that we recently met once before. So the decline takes place in the later part of August, and then on the cusp of August, September, there's a big move higher, standing out on a one-year chart scale, taking us back to prominent peaks in the early part of September. That rally ends early September. There's like this prominent move higher and a full retracement of that move to create the September high, and the September low forms in. It looks like the September low probably forms in like the second week of September, in like mid-September, due to a near overbought peak that we sell off from through multiple support levels. And then in the later part of September, we're rallying along a diagonal trend line to break through horizontal resistance, meet a second resistance, and then pull back to somewhere between those two price levels. And in so doing, there's a prominent peak there. Off of that prominent peak, we decline pretty notably from the end of September, the very end of September, into the early part of October. There should be like 3 pokes through the same price level in early October, followed by, or 3 pokes through the same resistance line, I should say, followed by a sharp decline off of that third poke, and a really notable drop in the early part of October. Important price level on a one-year chart scale highlighted at the October low. That was a cross-rating congruency. I'll talk about it in more detail in the paid version. A lot of price change near that October low to and from that price level, allowing for one to trade in both directions. Again, I'll talk about that in the paid version. And we have the same thing going on for the October high. We have an important price level as resistance on a one-year chart scale there, and a lot of price change back and forth between that resistance and that support, allowing for you to trade in both directions, utilizing those price levels as entries and exits. And I'll talk about it in more detail in the paid version. But the later part of October is the halting of a bullish trend marked by a sharp decline through key support. And then in early November, we have a prominent peak. Again, a lot of price change taking us into a prominent peak on a one-year chart scale, and there's probably see that peak twice in November due to the virtue card being the high correlator card in November. So we have a move across the price level to the upside, back down through it, and then back up through it, usually confirming a bullish trend on that third move to the upside. That's the virtue card. So that behavior will be near the high. A lot of volatility leading into the November low. And then there's somebody speaking in mid-November. It'll impact GME, and whatever they're speaking about, it actually can be relied upon or trusted. The later part of November, there's a prominent trough and also a breakout on a 1-year chart scale, creating a peak in early December that we sell off from pretty notably. The December low is a prominent trough on a 1-year chart scale, and a rally out of it a rally out of it offers opportunity to open up a short position. So that usually indicates that we will revisit the low. When you see the Princess of Wands in the low significator position, it usually indicates that we're going to see that price level again in the near future. So when you rally out of it, you can open up a short and then use the price level of the low of December as the exit for that short. Again, I'll elaborate on that in the paid version. There's a notable move on a 1-year chart scale into the December high, and the later part of December we have the establishment of support with sideways rotation, and then a big move higher sending out on a 1-year chart scale. The sneak preview for 2025, we should see bumping along resistance sideways, maybe breaking through, bumping along resistance sideways, maybe breaking through. But it's important, guys, to remember there's a lot more information as far as 2024 when you combine it with the 10-year reading, which I'm going to do as soon as we get into the paid version. And that's GME for 2024, my friends. Thank you so much for watching. As always, make sure to support the channel by subscribing if you haven't done so, and always make sure to follow that rule of karma. It's super important. Without that 3% of blessed souls following through, and we know the names of all of you. Guys, there's a Discord channel, a free Discord server just for people that regularly donate to the rule of karma, those angel investors, and I talk to them all times of the day. They ask me questions for clarity and things like that, stuff that nobody else gets, all because they're blessed souls and they follow through on their end of the agreement. So with that said, thank you again for watching. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you on the next one. Stay tuned if you got the paid version.